Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of corporate filings and let you know what's really going on behind the scenes. Today we're diving into Celularity Inc. And let me tell you, this filing has some interesting moves on the financial chessboard. This report is all about how they're raising money and what that means for their future operations. Celularity Inc. is a company that's been in the news recently, and this particular report tells us about some significant financial dealings they've undertaken. It seems they've entered into a new agreement to bring in funds and issue some equity-related items. Now, this filing is a Form 8K, which is essentially a report on significant events that occur outside of their regular quarterly or annual reports. So when you see an 8K, it usually means something important, and newsworthy has just happened. The key date for this report is July 21, 2025. This is when the main event we'll be discussing took place. The company is incorporated in Delaware and has a commission file number and an IRS employer identification number. While these are important for official records, they don't tell us much about the story, so we'll skip over those details for now. Celularity's main stock is Class A common stock, and it trades on the Nasdaq under the ticker symbol CELU. This is what most investors would be tracking. They also have warrants, which are like options to buy stock in the future. These particular warrants allow the holder to buy 1/10 of a share of their common stock at a price of 11.50 cents per share, and they trade under the symbol CELU, also on the Nasdaq. Celularity is identifying itself as an emerging growth company. This means they can take advantage of certain relaxed regulatory requirements for a period of time as they grow. It's a common designation for newer companies. The heart of this report is about an agreement they've entered into. This is where the real action is. They've secured a significant investment. On July 21, 2025, Celularity issued a promissory note, a type of loan for a substantial amount of money, almost $6.8 million. This money came from an investor. Think of it like this: the company borrowed money and promised to pay it back. But that's not all. Along with the loan, the investor also received a warrant. This warrant gives them the right to buy a large number of Celularity shares, specifically 3.7 million shares. The price at which they can buy these shares is $2.528 per share, and they have 5 years to exercise this right. What's interesting here is that the exercise price of $2.2528 is significantly lower than the $11.50 exercise price mentioned for their publicly traded warrants. This suggests a different class of warrant likely negotiated as part of this specific deal. Now let's talk about the loan itself. It carries an interest rate of 2% per year. That's a relatively low interest rate, which is good for the company. However, the maturity date is March 21, 2026. This is a fairly short-term loan, meaning they have to pay it back pretty quickly. And here's a critical detail: the loan is secured by all of the company's assets. This means if Celularity can't pay back the loan, the investor has a claim on everything the company owns. This is a strong signal that the investor wanted to be very sure they would get their money back or the assets. The company has also committed to using some of the money from this new loan to pay off another existing loan. Specifically, they'll be using funds to settle the principal and interest owed to CV, Star & Co. from a previous loan agreement. This suggests they're restructuring their debt and perhaps getting better terms or consolidating their obligations. The details we've discussed are just summaries. The actual legal documents for the note and the warrant are attached as exhibits to this report for anyone who wants to dive into the nitty-gritty legal language. This item essentially confirms that the company has taken on a new financial obligation, which we've already covered with the promissory note. And this item confirms that they've sold equity securities, which would be the warrants in this case. They likely weren't registered in the same way public stock offerings are. This is common for private placements of securities to specific investors. This section lists the exhibits that accompany the report. Exhibit 10.1 is the actual form of the promissory note, and Exhibit 10.2 is the form of the warrant. Exhibit 104 is related to the interactive data file used for electronic filings. The report is signed off by Robert J. Hariri, the chairman and CEO of Celularity Inc. This shows that the company's leadership is aware of and has approved these financial actions. So what's the story here? Celularity is actively managing its finances and seeking capital to operate and potentially grow. They've secured a loan with a low interest rate but a short maturity, and crucially, they've pledged all their assets as collateral. They're also using some of this new money to pay down other debts. The issuance of warrants alongside the loan gives the investor potential upside if the company's stock performs well. Looking at this from a broader perspective, Celularity is in a phase where capital raising is critical. The fact that they had to secure a loan backed by all assets suggests either a current lack of readily available cash for such a significant amount, or a strategic decision to leverage their assets for funding. The short maturity of the note means they'll need to either generate enough revenue to repay it or secure more financing soon. The low interest rate is positive, but the collateral is a significant commitment. The warrants are a tool to make the deal more attractive to the investor and to align their interests with the company's future stock performance. What are the risks and opportunities here? The risk is that if the company doesn't perform as expected, they could lose their assets due to the collateralization. The opportunity lies in using this capital infusion to advance their business goals, which could lead to increased revenue and a higher stock price, benefiting both the company and the investor who holds those warrants. We need to watch how they deploy this capital and whether they can meet their short-term debt obligations. In conclusion, Celularity Inc. has taken a significant step by securing this new financing. It's a move that provides capital but also comes with considerable commitments. The short-term nature of the loan and the collateralization are points to watch closely. What are your thoughts on Celularity's latest financial maneuver? Does this give you confidence in their direction or raise any red flags? Let me know your take in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe to Corporate Decoder for more in-depth analysis of company filings. And don't forget to join our Discord community for exclusive discussions and insights. The link is in the description. Thanks for watching and we'll see you in the next video.